Here's the latest. President Trump signaling Canada, India, and Mexico could get hit with a fresh round of levies, with the Supreme Court expected to rule on his sweeping global tariffs before the end of the year. Seroka, executive director of the Port of Los Angeles, writing, if there's less tariff and trade uncertainty, that will stabilize the supply chain. We're all waiting on the Supreme Court ruling on tariffs. Seroka joins us here in New York. Wonderful to see you. I do want to start on just how much of an impact you already have seen to trade based on some of the tariff uncertainty year to date.
Oh, it's been an unbelievable roller coaster of a year. When hard tariff policy went in, importers slammed on the brakes. Then when that policy was softened and deadlines extended, we saw a real surge in cargo, up and down all year. But we wind up with about our third best performance on the container side in our history. Yet exports have really lagged behind because of retaliatory tariffs, and Asia countries, our normal trading partners, cutting deals with other countries.
So you're saying that the U.S. can't kick its importing habit, but its exports have suffered as a result of retaliation more so. Has the importing mix changed for the United States in terms of where the countries are that are providing some of those imports?
It certainly has, Lisa. Starting back in 2018 with the first round of tariffs, 60% of our business was with China. Today it's 40% and dropping. Yet we've still grown because we've picked up a lot of trade from Southeast Asia.
So isn't China just using those countries to then send the goods to the United States, transshipment?
Anne-Marie, I was in China twice in the last month, and in the announcement of the 15th five-year plan by the China central government, they said specifically they're not just exporting products, they're now exporting manufacturing expertise to other countries. They're investing in Southeast Asia factories and supply chains. But as far as transshipment goes, the shirt I'm wearing, the button plackets go from China to Vietnam to make the full shirt and then ship it here to New York to the retail store. So it's nuanced, it's a little bit wonky when it comes to our business, but it's not necessarily transshipping to avoid tariffs in one country.
You talked about 2025 being a roller coaster. What do you expect for 2026? How much really hinges on what the Supreme Court decides on IEEPA?
That's a big deal. But then what happens? Do we see a refund of all this money from the Treasury Department? We know Costco has stepped into the litigation arena, only one so far, but let's see what happens. There are a couple of other companies that they followed in different sectors outside of traditional big box retail. If we see a relatively calm future over the next first two quarters, because maybe some are focused on midterm elections, that could give some certainty to the supply chain. Okay, I know the ground rules, I know the prices, let's get back to work instead of all this simulation and speculation of what could be.
How much does the uncertainty favor some of the largest companies over and above some of the smaller companies that are having a harder time navigating through it?
Oh, Lisa, I think there was a distinct advantage for those who decided to front load inventory and try to mitigate the presumption of tariffs, and then when they actually went in place with all the ups and downs of different announcements. More than half of our 125,000 importers at the Port of Los Angeles are small to middle-sized businesses. They tell me directly in conversations that they struggle to pass on those increased costs for fear of not being able to compete with the larger companies. Auto parts companies trying to absorb those costs as they send product to the big three manufacturing facilities, because the alternative is potentially shutting down a manufacturing line, which could be $2 to $4 million per hour.
So is something else going on when you look at small business confidence and the fact that it hasn't recovered to the same degree that, say, the stock market has? Is there something else going on here that isn't just with respect to a consumer that's flagging, but that has to do with an uncompetitive landscape in a way for some of the companies that don't have the supply chain heft and the data that some of the largest ones do?
You're right. And I'll give you another example. In Los Angeles, a number of small companies in our Chamber of Commerce, led by Maria Salinas, tell me that I buy a lot of small parcels from Asia, from China specifically, to put in my storefront, to put in my boutique shop. Now, with the de minimis exemption removed, their prices have skyrocketed, and those folks, family businesses, are in real trouble when it comes to keeping inventory at decent prices.
So you're seeing not so much a struggling consumer, but a struggling small business sector?
I do. And folks are trying to make ends meet. They're trying to dance around all of this policy change as best they can. They're resilient. They're working hard. but it's a distinct area of concern for a lot of small businesses.
Do you think it's enough for small businesses to actually go out of business, to close shop?
Haven't seen that yet, but again, folks are worried about what they do. You've got toy importers right now who take these 6 weeks before the holidays to make payroll for all of 26. And everything that cuts into their margin, if they're dipping into cash just to pay for those products because of the elevated tariffs, that's going to put a squeeze on a lot.
Ahead of 2026, what kind of front loading are you seeing right now?
Cargo is moderate. It's not falling off a cliff. It's not saying the consumer is going to stop. We've got Lunar New Year on the 17th of February, so we'll see a little bit of a bump before then, and then an early springtime for fashion here, especially in the U.S. But also for the month of December, we're anticipating about 800,000 container units. That's a really good number, but it's off just a bit compared to the comps of an elevated 2024.
You started by saying that the total volume of shipments from China has dropped from 60% back in 2018 to now 40%. At the same time, yesterday we read a story saying that China just crossed the $1 trillion surplus mark when it comes to total exports. How much is the United States getting cut out of the global supply chains right now?
Now, two pieces here. Even though imports from China are down, exports from China to the rest of the world are up by double-digit fashion. They're finding other customers in Europe, Africa, and Asia countries. Second, because our exports have been really waning this year due to those tariffs and different countries stepping in, like Argentina and Brazil on soybeans, Australia with almonds, we're seeing a really depressed export market. And we only consume about a third of the ag products that we harvest in the United States. Balance 2/3 go to renewable energy and overseas markets. That's not there.
Do you feel like people are pretty optimistic when you talk to them that there is going to be some sort of calibration of some of these policies, or do you feel like there is a sort of a gut check and sea change in the mentality of the businesses that you work with that have traditionally imported a lot?
The want is to get to a more stabilized environment. The actual on-the-ground work is still simulation. If I have to take another 10 percentage points of my sourcing from Vietnam, what does that mean? Do I have the services? Can I get the product to my regional DC in time for sales items, fulfillment centers, et cetera? So it's still a lot of extra work beyond the day-to-day execution of the supply chain.